Is a conventional loan the right option for you? In today's video, we're going to be discussing all the requirements for a conventional loan. Everything from credit score, down payment, employment, DTI, PMI, appraisals, and more, so you have the knowledge necessary to determine if this is a good option for you. My name is Jose.arvizu. I'm a loan officer in Texas, and my channel is here to help simplify the home ownership process by teaching you the ins and outs of mortgages and the home buying process. So if you're thinking about buying a home soon, make sure to subscribe and also share this channel with any future homeowners that you know so they can be better prepared as well. Without further ado, let's get into today's video. So generally speaking, many buyers consider a conventional loan the preferred option for a mortgage when buying a home. Is this true? Well, it depends. This question does not have a straightforward answer. What we would need to do is take an overall look of your financial standing to determine what loan program is best for you. Conventional loans take a more in-depth look at your overall picture, and they have stricter requirements than other loan programs. Much like everything else in life, there's pros and cons to the conventional program, but if you can qualify for them, a conventional loan is a great option to achieve homeownership. The minimum credit score for a conventional loan is 620. However, like we've mentioned earlier, conventional program takes a more in-depth look at your overall financial standing. So just because you have a 620 does not mean that a conventional program is the best option for you. All loan programs reward you with the lower interest rate the higher your credit score is. However, this is a much bigger factor with the conventional program. In my experience, if you're between the 620 and the 680 range, your best bet is probably an FHA loan, because the interest rate for that specific credit score range will be much lower with an FHA loan as opposed to a conventional loan. Now, if you're in the 680 through 720 range, I highly suggest that you take a look at both options. Take a look at FHA, take a look at conventional, and determine which option is best for you. And lastly, if your credit score is 720 and above, conventional is probably your best option. Quick little side note, so credit score and interest rates go in 20-point increments. So 680 to 700 will be getting the same interest rate. 700 to 720, 720 to 740, so on and so forth. Now let's discuss down payment options for a conventional loan. So with conventional loans, there's two down payment options, 3% down and 5% down. Generally speaking, the standard and most common is 5% down. The 3% down options are through programs called Home Ready and Home Possible. However, those have income requirements that you can't surpass. So if you're considering using a conventional loan, I would plan to save up 5% down, and then once you're ready to actually buy, maybe you can explore the idea of having that 3% down option. And if you meet those income requirements, then now you have both options, 3% down and 5% down. But just to be safe, if conventional is the option for you, plan for 5%. Employment requirements for conventional loans. The ideal scenario is a consistent 2-year work history in the same line of work, and also a consistent 2-year income. So conventional loans are more strict when it comes to these two requirements, especially the income. Things such as bonuses, commission, and overtime. With those things, conventional likes to see a consistent 2-year history of receiving that type of income. Otherwise, you may not be able to use it to qualify for a loan. Knowing exactly how much of your income you can use is key when qualifying for a loan, because this affects your DTI. Now, the maximum DTI for a conventional loan is 50%. Remember, DTI is what determines how much you can afford on a monthly basis. We take all of your recurring monthly debts, your anticipated monthly mortgage payment, add them up, and then we divide it by your gross monthly income, and that gives us your DTI percentage. Let's do a quick example, and I'll also have other scenarios on the screen. So in my example, I'm going to use $5,000 as your gross monthly income. So with conventional loans, it's actually a little easier to determine the DTI because it's 50%. So all you have to do is divide your gross monthly income in half. So in our scenario, $5,000 as your gross monthly income, 50% or half of that is $2,500. So essentially what this means is whenever you add up all your gross monthly debts and your anticipated monthly mortgage payment, If they equal $2,500 or less, you will be able to buy that home with conventional financing. Now let's discuss PMI with conventional loans. So if you don't put 20% down when you purchase the property, you will have PMI. However, with a conventional loan, PMI will not be on there for the entirety of the loan. You have the option to remove PMI when you have 20% equity in the property, or once you've paid down the balance to 78% of the original value, PMI will automatically fall off. Calculating PMI on a conventional loan is not as simple as calculating PMI on an FHA loan. With FHA loans, there's a simple calculation that we can use to calculate your PMI. However, that's not the case for a conventional loan. With conventional loans, as mentioned before, they like to take an overall look at your financial picture. And this is the same case with PMI. So the stronger your financial picture, the cheaper your PMI will be. The weaker your overall financial picture is, the more expensive your PMI will be. I'd also like to add that if you put 20% down with a conventional loan, you will never have PMI on that loan. Lastly, we'll discuss the property requirements for a conventional loan. So, conventional loans are more lenient than other programs when it comes to property requirements. Yes, they still take health and safety standards into consideration, but they're not as strict as the other programs out there. Generally speaking, as long as the property is in living condition, you can probably use conventional financing to purchase that home, which makes conventional loans perfect for those fixer-upper projects. So to summarize, conventional loans are a really great option if you can qualify for them and if you have a strong financial profile. Yes, conventional loans have stricter requirements than other programs, but like I just mentioned, if you can qualify for them, you will be greatly rewarded with more savings over the entirety of the loan. If you learned something from today's video, do me a huge favor and like and comment. It really helps me out and allows me to reach more people. Also, don't forget to subscribe and share this channel with any future homeowners that you know so they can be better prepared as well. If you'd like me to assist you in purchasing your next home, or if you just have any questions over mortgages or the homeownership process, feel free to reach out to me. My contact information is down below. Like I always say, guys, knowledge is power. The more you know, the better prepared you'll be. Thank you guys for watching this video and have a wonderful day.